Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 15th of May. And we're still going with the idea that we're looking at an inverted head and shoulders. So that was in place since February. Left shoulder there, obviously around the 8,000 level, and the right hand shoulder around that 7,900 failure. But if this is the right hand shoulder base, then we're looking at break of that neckline there near 7,900, and then quite a big push to the upside, potentially up to 8,300, which is the top of that rising September trend channel. In fact, with the 800 point dip of that head on the inverted head and shoulders actually should be added to the 7,900 or so that we have as the neckline. But let's just go for 82 or 8,300 over the next 1 to 2 months, maybe 8,200 plus by the end of next month. But so the key here is to break that neckline there around 7,900. Unless we do that, then we are not really in business. RSI is pushed through neutral 50, which is good. So 51, so an end of day close here above the 50-day moving average at 77.20 or so would be a decent situation for this market. Moving on to the DAX, which has always been, in the recent past at least, much better looking than the FTSE. Here we've had new support coming in at old resistance from February, March, 15,700, and above that we're looking for an end of day close through 16,000 to give us a top of September trend channel target as high as 16,750 by the end of next month. RSI in the upper 50s, which is just where you'd like it to be in this sort of situation, ready to push higher. And again, I suppose you could argue that the post-March price action there is an inverted head and shoulders, although the right shoulder there a very, very long one indeed. Below 15,700, the risk of a move down to 15,500 in the 50-day moving average. Moving on to the Dow, where we are waiting for the big break of the one-year resistance line. Still haven't got it, obviously. At the moment, we're just bouncing off the 50-day moving average around 33,100. Below that risks the 200-day line being tested at 32,600. But we're hoping that the rising 50-day line will then push this market up to 34,000, break that April resistance line from last year, and give us a push to 36,600 sometime over the early summer, so June, July. But at the moment, hopefully nothing worse than the 200-day line, 32,600. On to Bitcoin, which has been somewhat disappointing in the recent past. Here, though, at least we have found support near the late March support area, 26,700. Above that, we have the chance of breaking a line of resistance from back in April. That's currently around 28,000, so end of day close above that is what we're looking for to give us a move through 30,000 and a best case scenario target up to 34,000 at that June 2022 resistance line projection. Below 26,700 risk 25,000, but at the moment that's the worst we feel that is on offer. If you're cautious, you wait for the RSI now at 44 to push back above neutral 50 and get that break above the April resistance line and the 50-day moving average if possible. On to the stocks, and starting off with perhaps an unlikely contender here, advanced oncotherapy. Here we've cleanly broken the 50-day moving average. We did that quite some weeks ago. That's now around 4.25 pence. The initial May resistance at 6.25 pence. Above that, looking for at least 11 or 12 pence. In fact, 12 pence at the top of that falling trend channel, maybe up to 14 pence by the end of next month. So quite an unlikely turnaround there, but certainly one which is gathering steam. And if you look closely, you can see the 50-day line is now rising. That's another plus for the price action while we're above 6.25 pence. Moving on to a stock which I charted just recently when the shares were around the early 0.9s, so 0.92, 0.93, was looking for 1.2 pence, and as you can see, the shares have delivered in spades with a gap up today. So just to underline that the charting can work, and obviously a deal on the table announced today as well. Moving on to Chill Brands, which I've covered quite a lot over the last few months. It's been a good charting revival situation, as you can see there. Broke above that resistance line there from October back in January, then broke above the 50-day line in February, and it's been up and away within a rising trend channel from December ever since. Currently support around the 5.5 pence level, and above that we're looking for as high as 8 pence. Obviously interesting to see the issue of equity to a service provider today. Obviously they're good people and salt of the earth, one could say, in terms of their performance on that stock. Moving along to E-Star Resources, which looks like it may be starting to flip up here in a good way. Here we've got bullish divergence with the bear trap below the old December support there at 2.8 pence. Above that on an end of day close basis, we're looking for 4 pence as soon as the end of next month at the top of that broadening triangle from back in December. Ideally no pushes back below the 2.75 pence area. Next stock is one which it's not the type of stock I normally follow, but the chart here looks so good that it was almost irresistible, really. So Global Ports Holdings, here we've got a rising trend channel from June last year. We've bounced off the 50-day moving average twice in the recent past, around 160, and above that looking for £2.40 as soon as the end of next month, and also got a double bounce off the RSI 50 levels so far in April and recently this month as well. So looking pretty good there, especially with the 50-day line now rising. Stock which is on the move today as well is Great Southern, and here it looks as though the basing for the shares is finally out of the way, so finding support there just below a penny. More end of day closes above the 50-day line required. 1.25 pence would be good by the end of the week, and if we can do that, then it'd be up to 1.8 pence maybe by the end of next month. Big picture target as high as 2.8 pence at the top of that broadening triangle from back in December. Stock which I know has its fans looking for a turnaround at the bottom is IOG, and I covered the shares I think last week. It looked as though the shares were turning around with that long bullish divergence line. We've already hit that target there, the top of that channel, the initial target there from February, the February resistance line around 6.8 pence. In fact, the high today 6.75. Now looking for maybe a little bit more, if possible, up towards 8 pence at that late 2022 resistance line projection. Upside valid while we hold above Friday's high around 5.25 pence. Onto a stock which keeps on pushing higher. It had a great run earlier in the year, in fact last year. Now we were saying that above 8 pence we could hit 10 pence. We've already done that. Well, we did that this morning. If you're a fan of the shares and looking for further upside, then I could probably say that the next level up is the line I've just drawn up to 14 pence, so above 10 pence now, looking for 14 pence as soon as the end of next month. Upside valid while we are above the previous target there at 8 pence, so really flying there on Lexington at the moment. On to Mirriad, where we're seeing if the dust is settling after the recent push to the upside. Obviously there was news today as well. Clearly here the important thing is to hold above 3 pence. If we can do that, then the target up to 6 pence, and perhaps as best case scenario even 7.5. But let's see if we can hold 3 pence. If you're cautious, maybe you'd want to see an end of day close above 4 pence, the recent resistance, and that would maybe give more clarity or comfort on a potential move to the upside. A stock which has not been delivering much upside in the recent past has been Nanosynth Group, but just the first signs that we're going to break out of this falling wedge, the level to break around 0.62, 0.63. Above that, then we're looking for as high as 0.12 over, well, by the end of next month, but obviously we need to break that line there. Good bullish divergence there, so the lower lows for May versus April, but higher RSI trace, and that's the reason for the inclusion today. Stock which is firing on fundamental cylinders at the moment for many reasons is Ondo InsurTech, and I think there was some stake building today. We've been looking for the 20 pence area, which hopefully we'll get before the end of this month. If you're a fan of the shares and looking for the next target, well, it could be according to the line I'm just drawing at the moment, which is heading towards 27 pence over the next 1 to 2 months, and I think that's a fair target given the strong consolidation we've seen in recent days. But if you are cautious, maybe wait for an end of day close through 18 before targeting up to 27. Upside certainly valid while we hold above 12. Just on to the last two now. One is Webis, which wasn't really looking to look at, but here we have a higher low put in place. Looks like we've got a rising trend channel there from July, and above that recent low 1.4 pence, looking for the shares to get back up to the 1.8, 1.9 pence area of the 50 and 200-day moving averages, but on a 2 to 3 month view, perhaps up to 3 pence while we hold above the 1.4 pence area. Finishing off with Woodbois, which gave most people burnt fingers, I would guess, after recent news, but shares starting to regroup and doing it quite nicely, actually. So just breaking Friday's high, that was around 0.57, above that on an end-of-day close basis. We could get up to trying to fill that gap up to 0.8 or 0.9 by the end of next month. Upside valid while we hold above recent neckline resistance around 0.45 pence and the floor of the April gap. That's it for me today. More updates tomorrow.